we're live. Okay. Yeah, I'm gonna share the link now to everyone. I'm gonna mute myself. EA, GU, EU, DXY, USD CAD, UJ. So we've got a couple of pairs already. These are the main pairs I look at or trade actively. I don't really trade any others too much, but if there are any you guys want us to have a look at, we can always have a look at for you. Like I said, we'll just get started in a couple of minutes. Wait for a couple more people to join. I hope you're all doing well. Like I said, it has been a great week. Done a lot of opportunities. Okay. Yeah, we'll just wait 1 or 2 minutes, see if anyone else joins, and if not, we'll just get started, alright? Okay, yeah, we'll get started now anyway. It seems like we've got a couple of people that have joined, so we'll get started now. Like I said, if there's anything you guys want to do at any point, feel free to ask and we can have a look. So first, I just want to talk about what's happening. What we're actually looking at the week after that as well. So what we had this 4-hour IC that has been reacted on multiple times. You can see touch, and it's created liquidity. Sorry, 1 second. I'll try to get that sort of view going. Sounds very low. Yeah.
Let me. Sounds terrible. Is it? Let me see if Mo can sort that out quickly. Let me try to get that sorted for you guys. Just be 1 second. Now, is it better now, guys? Okay, great, perfect. Okay, it's better now. Okay, great. Okay, yeah. So I'll start again, just as I was saying. So what have we actually seen previously? So we've seen this 4-hour IC right here, and we've had multiple touches. So you can see a touch here and reaction, a touch here, another reaction where it's failed to make a lower low, and another reaction here where it's failed to make another lower low again. So what has this done? It's built up liquidity for it to get taken out, which it does clearly, and which is great. And it pushed up above this as well and provided an opportunity, obviously, for a bit of a sell-off. It didn't quite come up to here where the 1 hour IC is, but there has been a reaction that has started pushing down to the downside. So what do I actually see and what's happened this week? Okay, so what has happened this week? So we had the push up at the start. So we had a reaction off this, I believe. So we had a weekly continuation candle the week before as well. So this week was very bullish, which is great. Obviously, it's good to have a look at the higher time frame as well. What do we see? A reaction to the upside on Monday that created an IC as well. This is a potential opportunity if you guys are looking for an extreme level to try getting around here for a potential entry. We've had multiple things happen. So you can see here, there's a continuation candle being created. But what's actually happened is quite close to the end of the move, not the start of the move right here. So personally, I don't think that's a good IC. I'd say this IC isn't the most amazing of ICs. It doesn't really do much for me. So I'd be looking for something a bit lower like here, or even this 4 hour right here that I do think would definitely provide an opportunity. Because this zone here, there's a bit of consolidation. There's some feedback in the background. Okay. That's okay. There's a weird echo. Interesting. Okay, let me see. Oh, okay, yeah, I hear it. Okay. All good. Yeah, so as I was saying, this zone here with this 4 hour IC and just this level in general shows to me that there's a potential for reaction off it. You can even look lower to this 1 hour right here, or this zone in general. I do believe as it's more of the middle, it's like a fresh zone, hasn't been touched before. Price hasn't come down to it, and it could definitely provide a reaction to the upside. And if not, you've definitely got some opportunities down here, like this 2 hour IC right here, or even lower, like this 2 hour here, which, like I said, is an extreme level. This is the type of level we definitely want to be trying to get in on if we can, and holding for a buy, especially when, if we do this quickly, you can see that on the weekly, there is this IC above that price could definitely come to in the coming weeks. So if we are getting in with a better entry, all the way down here, we could definitely be looking to hold it right up here as well. So you look at this, the difference here and here. Obviously, you're going to be on it for a long time if you do hold it, but it's about 500 pips there. So you can look to kind of trade it along the way. So you can kind of change your bias maybe, because obviously you can see, like you say, it has made a higher high. So you could potentially expect a higher low, and to push this in the future. Obviously, it won't push up just like that. You're going to see pullbacks. This is where you can try get into trades and take profit and things like this. But you could trade along the way up until this level, and this is where your bias could potentially change if you are looking for a sell at any point. So this is obviously some of the things that have happened on GA this week. So it has been a pretty good week on it. It's had a lot of pips, and it does seem like it's starting to sell off a bit. But like I said, there could be a reaction potentially of this level over here in the middle. Like I said, this is more of a middle level. It's fresh. It hasn't been touched yet. This is an extreme level. So if we do get in it, it's definitely the most favorable, but it's way less likely to actually come down to here than over here. So we'll look at EA now. Okay, so what's happened? So we've got here multiple touches off this daily level. So you see this daily here. If we just get rid of this one quickly. Down here, so you can see this daily has had multiple touches. It's just this level in general, multiple touches, and it starts to push up from there. So on the smaller time frame, you can see what's actually happened. So it's taken out this previous low, and then it's made a higher high as well. An extreme level, it's just kind of the top and bottoms. This is where I'm looking for my trades if I can get in them. Like I said, this takes out the low and then pushes higher, makes a higher high. But what does it do? It fails to hold above it. You don't see any candles close above it. And that to me suggests bearishness. And obviously it does sell off from this point. As you can see on a smaller time frame as well, you see this 2 hour IC being reacted into, even around the 50%. Look at this for a sell. Like I say, this is like one of the extreme levels. This is the high and the low. This is where you want to potentially be getting into a sell from. And you could easily hold that, like say, to this area over here potentially where it hasn't been touched into yet, and a level that could see a reaction, or even down here. But we've had the exact same situation on GA and EA, where you've had this push up with the top and the bottom, And then you've got the middle section, which is obviously my favorable. And then you've got the top continuation candle, the top IC, which doesn't really do a lot because it pushes up into the 2 hour and then drops after that. This is not a great IC. Like I said, it's towards the end of the move. This is not favorable to me in any situation. So going into next week, obviously we can potentially see it drop a little bit. And like I said, I'd like it to see a reaction from around here. You've got this 1 hour that hasn't been touched into yet, which could provide you a great opportunity, especially with the fact that it's towards the low of this level. You could be using a 10, 15 pips stop loss max, and you'd be able to get into a good trade from that. And you could be targeting the previous high. Because the thing is, it's come up into this level. If we have a look on the higher time frame, what we've got above is another weekly IC that we could definitely see it coming into in the future. So if we just get rid of all this, you can see it's been ranging a little bit, but what we need to see in the future, if it's going to keep pushing up, is definitely to come up to this level right here, which is what I could definitely see happening in the next couple of weeks. So it's always something to look out for, potentially find a reaction there, if not around here. And like I say, you could do the same on GA. You don't have to hold it. You could just look to trade it up to this level, up to this weekly up here. So next we're looking at GU. I'll go through these pairs quite quickly. If you guys have any questions at any point, feel free to ask. I'll just answer them. And we can always have another look at some of the pairs if you guys want. So what we got on GU, if we just have a look. Okay, so GU kind of did similar as well. Like I said, you've got a couple of levels here. So you've got this 4 hour continuation and just kind of a level in general where there's a bit of consolidation, where it drops a little bit before it pushes up. There's a reaction off this level. Obviously, it pushed a little bit lower, so you might have been taken out if you did try to trade that. But you can see it start to push a little bit higher. And it's failed to come into this area where there's an 8 hour IC right here. You've got an 8 hour IC here where it wasn't able to wick into, and it started to push down a little bit. So you could potentially see it push up into this next week. If not, you could definitely see it come down a little bit first and then push up after that. Like this has been taken out. This has been pushed up from already. This area is less likely to work. However, there is a 30-minute within this 30-minute reaction as well that you could actually see a reaction for potentially. Like I said, this is another IC where you see close to the end of the move, so it's not favorable right here. These are the type of things you want to be missing. The type of things you want to be doing is in the middle or towards the start of the move. Every buy to sell or sell to buy. Yeah, I mean, at the end of the day, if you look at these moves, the start and the end of the move, a lot of them have these ICs in them because a lot of them take liquidity or do something. There's a reason for them, the high or the low. This is my favorable type of IC. But if you can get stuff in the middle of the move as well, that generally gives you a continuation where you're able to potentially find a higher low or a higher high. So this is what I'm kind of generally looking at when I'm looking at the trading. I'm looking at stuff like the very low, the very high, and what in the middle of it to see where I can actually get into a trade. But like I said, I'm not trying to trade off this here because it's not favorable to me. There's not a lot there. But around here, you could definitely see something because it's off this previous low, and you could potentially see a higher low and then make a higher high and break this level here. But obviously, you've got this 8 hour. So like I said, you'd have to look out going into next week to see if it reacts from this level or not. On EU, we'll look at that quickly. So what did it do? Similar to GU, it reacted off this 1 hour level, this 1 hour IC, that hadn't been touched into before. And then it pushed up, made a higher high, but it failed to hold above it. Like you see, there was no close of the candle above the line and it didn't show bullishness. So obviously it sold off from there. There was a bit of news that came out Wednesday that shot it down to this 2 hour IC right here, came down to the 50%, came right back up, came into this zone and then sold off from there. So this is something you can be looking at when you're trying to trade. Obviously this has been wicked into, so there's no need to look at it again because chances are it's not going to work because it's been wicked into, it's wicked past the 50%. So what we want to be looking at is actually a little bit lower down, which you see right here. You've got this 4 hour, yeah, it's been touched into. However, you've also got a weekly IC here that actually got wicked into that day. So this right here is the 50% of the weekly. So if you manage to combine these things together with the 4 hour IC and the 50% of the weekly, that gives you a great entry point. And trading off a weekly is going to give you a great bias for the longer term when you're looking at buys or sells. At the end of the day, how bullish it is right now, we're expecting something like to close above this, and that will suggest bullishness and buys into the future, which is definitely what I'm looking at, especially when you see this daily IC right up here, where price could definitely come into. Obviously, it's reacted off this 8-hour and 12-hour level already, so it's less likely to form a reaction. Like I said, we're expecting it to be bullish. So my next level I'm looking at potentially for a sell, if I'm looking at anything for a sell, would be right up here within this weekly and monthly level to the left. As you can see right here, these are the monthly levels. This is what I'm generally looking at. I'm looking at these buys to sells. I'm trying to look at the higher time frame to see where the market's actually moving. And you see a lot of the times you see these ICs. You've got a weekly level around here. You've got a weekly IC and a weekly buy level. This is great for opportunities to get into certain trades. And like I said, if we can try get into entries on a smaller time frame, this gives us great opportunities for a buy or a sell if we trade off the 4-hour, 1-hour, or even 30-minute time frame. Okay, so DXY was obviously similar to EU, just the other way around. I thought it was important to note that this is similar to like I've been talking about. This is an IC that isn't amazing. It doesn't really do a lot to me. It's not near the start of the move right up here. It's right towards the end. It's not going to have a reaction like the other ones. So I'm not going to be trading it. I'm not going to be touching it. Obviously, there was a little bit of reaction. You did see a bit of a sell-off, but it failed to make any significant low. So it's not really worth even spending time on. What we did actually see, obviously, it took out the low on the Tuesday that was created on the Monday, and it did hold below it. But obviously, it started to move in the other direction, where you saw this reaction is pushed up higher, and this actually wicked into this area. So it was actually kind of we saw multiple things here. So you saw a 2-hour IC right here. You saw a 1-hour IC, and what's important to look at is if there's a wick on a higher time frame, like this 2-hour IC, you see this wick right here, right here on the wick. There's generally going to be something there on a smaller time frame. And what there actually was, the actual reaction was off the 30-minute right here, as you can see. The actual reaction, it wicked into it and then started to push down after that. And like I say, the closer it is to start the move, the better it is for me. So this is a lot closer, obviously, than down here. So I'm generally going to see more of a reaction, regardless of the time frame, because it's a bit closer towards the end of the move. This is similar to what I spoke about on EA and GA, because it's a fresh zone, it hasn't touched before. It's around the middle of the move, and this is where you can find continuation things. Because at the end of the day, if we look at the higher time frame, we can see that DXY is very bearish. It's had this weekly reaction. It started to sell off. We're expecting, a lower low, which would be amazing. We could definitely see it sell off from there, to be honest. That's all good. That's all good. So we could definitely see it sell off. So this is where we're actually looking for entries on smaller time frames based on our weekly time frame bias, which is what we've been looking at, because this is around the middle of the move. But like I said, because we're looking for that sell, this gives us a way better opportunity than if it's up there, because it's less likely to work, because we're not expecting it to come up all there. There's no reason for it to come up there. There's more of a reason for there to be a continuation off a level around here where it's going to sell off. And going into next week or even the week after, I could definitely see it make a lower low. Obviously, what we're hoping for is it to hold below it with some candle continuation. That'd be great. But I do definitely see it selling off into the future. If you guys, like I said, have any questions at any point, feel free to ask. I'm looking at the chat so I can see everything you guys are asking, which is great. But like I said, this just is not a strong IC. It's important to look at ICs and see what actually works. So you have to think in your head what's going to work and what's not going to. What does this IC actually do? Is there a reason why this IC has been created? What's it actually done? Is it taking liquidity? Is it taking a higher low? Is there an actual reason why this could work? And this is something that we're definitely looking at this level, because it's not great, but this works, this can work. And this provides us a lot more opportunity to get in around here. And like I said, look at the smaller time frames if you can. Look at a 15-minute, look at a 30-minute if you have time. And you can definitely find better entries there based off the smaller time frame than if you're on the higher time frame. So looking at USD CAD, it's not my favorite pair, but but I could definitely see it keep pushing down in the longer term. At the end of the day, if we look at the higher time, it's always important, like I say, to look at the higher time frame to see what's the reason for it to actually push down. You've had a reaction off an IC that has failed to make a higher high or any form of that. It's made a lower low. kept pushing down. What's it at right now? It's actually at previous low. Obviously, it has closed not too bearish. And then obviously, we're expecting it to push down a lot more because you can see down here onto the longer term, you've got, a lot of imbalance down here. This is all buys. This is all buys. There's no sells here. So we're definitely expecting, price to come back down into it 100%, in my opinion. You could potentially see a reaction around here for buys, but this, this is obviously in a longer time. But this is where I'd be looking for buys after all the imbalance has been filled and after it kind of completed this whole move. Because at the end of the day, you've got this move where it's reacted off this IC up here as well. But you've got this whole move, and I'm hoping it completes this move and then reacts off another IC that's been created. You see the ICs created where there's these whole moves made like this. These ICs make moves, these push moves, because this is where the market orders come in from the banks. They push price down and then it pushes up. Let's look at UJ as well. I don't really have a lot to say about USD CAD because, like I said, it's not my favorite pair, but it does provide a few opportunities here and there. I'll answer questions in a second for you guys. I just want to go through UJ quickly and then I can answer all your questions. So as we can see, this week, the weekly was wicked into. That's always an interesting thing to see when we start off the week. But what we can see is there was actually a higher low, higher high created. But as we've spoken about before, there was a failure for price to hold above it and close above it that suggests bearishness. And obviously it has sold off from there. So what are we expecting? We're obviously expecting price to push down a little bit. What have you got? You've got this 4-hour IC. But like I said, if there's a wick on the IC or the candle next to it, look in there, look to see if there's an IC. And what do we see? We see a 2-hour IC right here that could definitely provide us a good opportunity. And what we need to see, because there's a 4-hour IC up here, we need to see it push above and hold above this level to be able to push up to this IC right here. And then you can potentially get a sell off there. Because at the end of the day, DXY is bearish, but UJ does move a little bit differently. So just be wary of that. But we could definitely see a potential sell off here. You may not get a lower low, but you will see some form of reaction in my opinion. And obviously the next level is just right at the top here, where there's been a reaction off a previous level right here, as you can see, of around here, as it has filled all the imbalance up here, which is what we've seen. But I could definitely see buys going into the longer term if we see a reaction as well. What's good about it, you've also got the 2-hour and the 4-hour within the daily, which is perfect because this shows you that the time frames are aligning for you to buy based on the higher time frame bias. Okay, so that's the most of the pairs I looked through. I just wanted to go through a quick run through for you guys to show you what I look at, what I've been looking at recently. And we can always have a look through again. I'm just going to answer some questions for you guys. So why is the higher IC more valid? So the higher IC I generally consider more valid because, like I said, it doesn't. So if we look at DXY for the example of that IC that is created, I won't go through too much in detail, but I just want to show you guys that it doesn't do a lot for me. It doesn't, take a high or low. It doesn't do anything, in my opinion. But something like this, is towards the middle of the move. It's a fresh zone. There's a reason for it. This has already been wicked into once. There's not a lot that happens because of it. There's no push down because of it. You see 2 candles, whereas this one you see a lot of push down. You see this whole push down. This is, a lot of pips. Obviously, this is DXY, but you'd see the same on EU. This is a large push down because of it. Whereas down here, there's not that push down that you see up here. And like I said, because DXY is bearish, we're less likely to see a reaction up here than we are here. So this is why I say the second level to me is generally the better one than the extreme level, which is what I consider up here, that we see on EA and GA recently as well. This is definitely my favorable opportunity, and this is where we're going to see the reaction from. This is what I say. So if we inverse it quickly, because it's my favorite thing to do, honestly, if we look in the opposite direction, we can see the price pushing up from. This is where we see our continuations. Could you see prices pushing obviously down in this situation? But you can see prices come down to this level for a continuation. Now it's pushing the opposite direction. And this is where we can, like I say, if our bias is there, if our higher time frame bias is there, if it's moving with the higher time frame, we want to be getting in around here. We don't want to be getting around here because we're less likely to see it. So I wouldn't even worry about these kind of things. If it comes to it, great. But I'd just be aware if it does come to it, there might be a reason. There might be stuff below it. There might be a weekly or something that could actually take this trade out. So we would be wary of that if you are looking at these extreme levels up here. Can you explain how we spot ICs? Thanks. Yeah, so generally what I'm looking at on ICs is something, like I said, that takes liquidity, takes a high or low. So generally, to me, has to be a purpose for an IC. The IC has to do something. And if it doesn't do anything, or if there's no reason for it being there, then it's not going to work. Like I said, there's no real reason why this is an IC. There might have been news or something that came out, but it just doesn't do a lot for me. There's no real, like I say, it's towards the end of the move. So you're not going to see a lot from it because, like I say, it doesn't move a lot down from it. You see a little bit of a lower high, a lower low. But apart from that, there's not a lot from this IC right here. How can you spot a strong IC and how is the best way to start looking for opportunities during the week for the week ahead? Yeah, so what to look for the week ahead? It's always important to obviously look back for the past week or even the week before to see what's happened, see what reactions happened. And like I said, as you can see here, we've had this continuation. So what we're going to be looking for going into next week, potentially or even the week after, is price to push down. We're going to be looking at stuff like the imbalances around here potentially, or other ICs that are being formed on the lower time frame to see if there's a potential entry as it pushes down to potentially push back up for a pullback for us to get into the trade. Obviously, this is, like I said, this is DXY, so we don't really trade DXY, but it's good to try and find an IC along the way for price to pull back. So what I would like to happen, what could happen, is it could make a lower low right here and then could come up to this level where there's been a continuation candle. So we want to see a candle of the opposite color. So we want to be seeing a blue candle right here. We want to see a blue candle, maybe around here, and then another red candle that pushes price down. And then this is where we could potentially be looking for a reaction from, because this, like I said, is continuation. It keeps the move going. If there's a large push down because of it, you've got a strong IC there. You've got a reason for the IC as well. This is where multiple things to me add up together for me to get into the trade, because you've got the higher time frame bias, you've got the continuation candle, you've got a reason for this IC, and this is what you're going to be thinking about. This is what I'll be talking about for your trading plans. That I'll be talking about in a little bit, because these are things I'm going to be looking at through in my head every time I take a trade, especially when you're trading based off the higher time frame, the 4-hour, daily, weekly, whatever. It's good to, like I said, it's also good when the time frames align. So make sure if you are looking for these ICs for the week ahead, if you can, try and look for something based off the higher time frame bias. If you can, obviously you can do it based off against the bias, but you're not going to find as much pips there. It's not really as worth it. You're more likely to get taken out of trade, especially when, as you can see, DXY is very bearish at the moment. You've got a weekly IC up here that's been wicked into as well. So there's no real reason for DXY to come up as much as it has been. So I just think we're going to see sales coming into the next couple of weeks from it. So like I said, try find a continuation candle along the way if you can that can confirm your sells or even your buys on EU in this instance. That's generally what I trade based on. I hope that helps you, Emmanuel. Okay, so Gaming Smoke said, so a valid IC could be a buy to sell or sell to buy with a strong rally on the opposite direction afterwards. Would then look for price to return to that IC for entry. Yeah, exactly. So what we're seeing off this move right here is you're seeing a strong move because of it. There's a reason for it. There's a lot of push down. Obviously, this is a smaller time frame, so it's not really going to be based on market makers. This could be some news. I believe news came out for it, which caused a drop. But obviously, news, as we know, is more of an excuse to move price. So price still pushes down from it. But this is a large push down and gives us definitely a better entry point or a better IC than something that's here that, like I said, doesn't cause as much of a push down. So I wouldn't say it has to be valid for this instance, but if you're trying to get a lot of pips out of a trade, or if you're trying to trade with more success rate, it's going to be a lot better off an IC like this. Maybe not a valid IC, but what I would say is a strong IC. There's a strong rally in the opposite direction, as you say. Like I said, an IC, what it does, it pushes up and the price pushes down straight from it. This is what we're going to be looking at. You want to be trying to find ones that there's a reason for. That's 100% my opinion. Find a reason for an IC. That is the most important thing in my opinion. Find a reason for it, and then it's way more likely to work. I hope you're well. What's an IC? An IC is an institutional candle. If you do want to learn more about ICs, feel free. You know, we're always help to help out. If you want to join us, we can always help you out. Try and kind of teach you more about ICs, everything we can. More about the in-depth stuff on ICs, because like I said, I want to kind of show you my bias for the week. But we can always help you out with that. Do the market makers always go to mitigate the imbalances? Not 100% of the time. Basically, what I use imbalance for is more of a reason to kind of not a way to find a trade, but a way to kind of realize where price is moving. So if there's more imbalance on a certain time frame, I'm generally going to see more of a reason for price to push up or down from it. So stuff like this. At the end of the day, you can see DXY is bearish. We can all kind of see, you know, you've got a lot of push up here. You've got a lot of imbalance created. And this generally tells me there's a reason for price to push down to it. There's reason why price has pushed down already, and the reason why price is pushing down, because it's going to fill this imbalance in the end. You've got a monthly IC down here that, you know, I'll be looking at for the longest time for buys from, where it complete the structure of the buy, the sell, the buy, and the sell. And then I do think it will push up from there. But you've got a lot of imbalance here. And like I said, I'm not going to trade based off this imbalance. You know, I'm going to look at other time frames or other things like ICs, but this is going to provide you with a lot of opportunity on why price is moving, where it's going. This you can use together with ICs to kind of get into a trading plan, because like I said, you've got here, what have you got? You've got imbalance. I'm not going to be trading this imbalance right here. You've got imbalance here. What I'm using this for is a reason why price is pushing back the other way. And this is another reason why I won't get into certain trades if there's no imbalance. Because if you've got an IC here, if there's imbalance and another IC above, I'm more likely to take this IC than this IC, because you've got imbalance to fill. Where it does fill it, obviously you see a little drop because of it, and then price pushes up. But the imbalance generally just tells me where price is moving or price could do it. But it doesn't always 100%. They're not always going to do it. But generally on the higher time frame where they're going to be looking at, there's more likely to at least touch into, as you can see here, you know, just touched into it or fill imbalance. Would you mark out the area from wick to wick, or just open to the wick? So on imbalances, I mark the previous wick to the next wick, generally, unless you mean an IC, but that's generally what I do on imbalance. So I'd mark this wick here to this wick, and that would be my imbalance right here, where price hasn't pushed into. There's no push in for price until the later date where we get the price into the IC as well. I believe if I think someone asked me to look through gold. It's not my favorite pair, honestly. I don't trade it too often, but look, honestly, I mainly look at the higher time frame. What my basis is mainly the fact that you've got these massive ICs right here, this very high, the you know, the 2050 level and the 1950 level, that I do see potential for price to push back off. Potentially even down to here. I'm not 100% sure. We'll have to see. I doubt it will come down this low, but I do believe price is just going to keep pushing up to here, especially if we see it break above this level. Like I said, what you've got imbalance to fill. This is important because, like I said, we don't have to trade burst off this, but this tells us where price is moving to. When there's more imbalance, there's more stuff for price to push up to. So the price will move in the direction of the imbalance. Yeah, I mean, if there is imbalance created, obviously the price moves in the direction of it, but if I'm looking for price to fill imbalance, it's generally going to go in the opposite direction. For the IC, yeah. So for an IC, I mark it from the body to the body. So if you can see right here, you've got this right here. I mark it to the body, and then generally, if I'm looking for a trade entry, I'm going to be trying to set my stop loss below the wick right here. So this is generally where my stop loss will be, just below this wick. This will give you a little bit of leeway if you take off the 50%, which is generally what I do. Gives you a little bit of leeway. Obviously, you're on the daily time frame, so you want to be looking at a smaller time frame for an IC, especially on gold. But this is generally what I'm going to be doing for my trades. So if just an example, if I want to take this, I'm going to be 50%, and then my stop loss is just going to be below there. Depending on how price is moving at the time as well, it could push a little bit lower if there's news or anything. It might need a little more leeway, but this is generally what I base most of my trades off. GJ. Okay, not one I've looked at in a couple of days. Okay, so oh wow, interesting, very interesting. Perfect. Okay, so what we see is a break on the previous high. Like I say, this is strong because you've got this close above and it's started to push up higher from it. But what we actually see right here is a weekly. Right here, you've got this weekly IC. Price pushing up to it. Hasn't quite touched the 50%, so it's hovering around it. So there could definitely be a sell off it. Looking into longer term, you've got another one up here. So price could definitely come back up to here. But I do believe this IC could work. So like I say, you want an IC with purpose. What does it do? It takes the high, takes this previous highs, takes all these highs out, pushes down because of it. You see this large push down from it. And then I do believe it will sell off from there. I do believe the Zoom's about to end. So it might end quickly, but then we can get back started back up. And then I'm going to talk to you guys about trading plans. So make sure you stick around and we can talk about trading plans and kind of how to utilize this to your advantage to when you're trading. Perfect. Okay, great. So now we are going to be talking about trading plans. Hopefully it's all good. If you guys having audio issues, anything, please let me know. But it should be okay. Just getting things set up for the next portion. So one can say ICs are similar to supply and demand. I guess it depends on how you're looking at it. Let me share screen. Sorry, let me try again. At the end of the day, supply and demand can have some similarities. But I'd say supply and demand is more zones than ICs, so it gives you more of a level and less of an entry point. And that's one of the reasons I prefer ICs, because ICs actually give me an entry. It gives me something to actually trade based off rather than just a whole level that I'm just looking at for a potential trade. Obviously, you can see ICs within these supply and demand zones, but generally what I'm going to be looking at is that. Is the screen share working? Hopefully it is. Yeah, you're seeing it. Okay, great. Okay, so what have we got here? We got a training plan or an example of a training plan. So I want to talk about multiple things here. So what we want to go through first is reasons to get into a trade, like I've spoken about this past session. So what do we actually want to be looking at? Are reasons why a trade you may or may not take a trade. So what we got? Things like, does it match the higher time frame bias? So like we saw on DXY, that 30-minute IC, does it match the higher time frame bias? Yes, price is selling off that weekly. Price is very bearish. So stuff like that, that's definitely reasons why we're going to be getting into the trade. So if it's yes, the trade is definitely valid. Is there a higher time frame IC or level that we're looking at? So let's just say we're looking at the weekly on DXY. So that level around there, is there something around there we could trade off? So we saw it as well on EUs. We saw that reaction off that level, off a higher time frame and a smaller time frame where we can match things together. So that 4 hours way more likely to work with a higher time frame IC level than something without it, and that could be a reason why a trade may or not be valid. Like I saw here, it could be valid if it's close to starting the move. So you see that, like I say, that extreme level, or you see that fresh zone was around the middle that could provide that continuation for you to trade higher or lower. Is the IC near the start of the move? Like I said, no. Is it right near the end, like we saw on DXY? Is it valid? No, generally not. Has the IC taken liquidity or made a high low? If it hasn't, like we've spoken about, like this GJ one that we were looking at, it's made a high or low. It's taken liquidity. It's taken out all the previous highs. If it doesn't do anything, like I say, I want an IC with a purpose. If there's no purpose to the IC, like I see here, it could be valid, but the IC has to have purpose, and that's the most important thing in my opinion. IC, there has to be a reason for this IC. Are there multiple time frame alignments? This is what I'm on about, where we have maybe a weekly and a 4 hour or something, a couple of time frames that match together, 1 hour, 2 hour, 30 minute, things that all come together for then to trade more likely to work. This is things you want to be thinking through your head each time you take a trade. You want to be kind of almost like a step ladder. You want to be going step by step. And if there's an obstacle or a reason why you're not going to get into the trade, you won't trade it. And that makes it a lot more better, in my opinion. Because then you're thinking through your head actively, and it's better to not take a trade than to take a trade where you have no confidence and lose out on it. So here we have an example trading plan. This is something you can kind of look at to see this is your rules. If you trade outside of this, you're not going to, you don't want to trade outside of this. This is what you're going to stick to every single time, every single trade. So what have we got? The strategy is obviously smart money. This is what we mainly trade. This is an example. So basically what you could be doing is holding up to, this is what kind of similar to how I trade. So let's just say you're holding Monday or Tuesday to Friday. That's generally what I prefer. You've got a pair selection. Try not to trade too many pairs, in my opinion. It's not really worth it. You don't want to be looking through the pairs 24/7. Stick to 2 to 5 max, in my opinion. For that's optimal. You can look at price action. You can study it. You can look at multiple time frames each day, and that'll make it a lot better for you to get into a trade. Entry signal. This is things you're going to be trading based off. So you're going to be trading off ICs, maybe imbalances if you want to, through market phases and breaker structure. So what you'll have to have breaker structure as well as the IC there for you to get into that trade. Entry style. So that means what are we actually trying to get in off? So we're trying to get right here. It says off the 50% of the IC or imbalance. We're trying to set limit orders. Makes it beneficial to us, and the entry has to be during London Open or New York Open. If it isn't in those times, we're not going to trade it. And that, like I said, rules is what's going to get you through in this game. It's going to keep you disciplined, and that's going to make you more money. Take profit. Where are you going to be taking profit? We're going to be taking it above or below equal highs or lows. Potentially taking profit at ICs that suggest reversals. So things, like I said, ICs with a purpose. We're definitely going to be taking partials, or even just all profit, and then imbalance as well. Stop loss, 1% of the account. Stick to it. 0.5, 1%, anything to you. Try not to obviously over leverage, but 1%, 0.5%, very optimal. Make sure to stick to that every single trade. Get Forex lot pip calculator up every single trade. Make sure you work it out each time for your stop loss. You can also do how many pips you're willing to do per trade. Obviously, you could do like 10 to 15 max. You could always consider that into your trading plan as well, so you don't go above that. So it makes it be easier for yourself to work out your stop loss as well per trade and your lot size as well. Like I said here, this is also a thing we can look at, the take loss style. So this is where obviously our stop loss will be. Where will it be? It will be below the wick of the IC, or below or above imbalance. Obviously, it'll be the same if you're trying to sell, but we're trying to trade and keep it optimal. So we're trying to trade off these ICs. If it doesn't work off this IC, it's okay. We go again. We look at another IC or another trade entry. A bailout indicator could be reasons why you take out the trade before it hits stop loss. So it could be confluence isn't there, or even just reasons we don't get in the first place. So it could be EU could be buying up, and there could be an IC there for a sell, but there could be nothing on DXY, so it'd be similar on GU as well, because you want to have that confluence with multiple pairs that add up for a reason for you to actually get into that trade. There has to be multiple time frames that work out for that trade to work, and multiple pairs. So if EU goes with DXY perfectly, in my opinion. They're great things to look at. Just look at them together. If there's no IC on one, don't trade it. It's not really worth it, in my opinion, because there has to be both together for a reaction to actually happen. How far back do you look for EHEL for plotting the next week ahead? It depends, honestly. I mainly just kind of look at how the move is. So I generally look at the higher time frame. I look at kind of how the move's going. So if we are on a weekly move, I'll be looking at around the 50% or something for a continuation, because we're on a maybe a sell or a buy bias based off the higher time frame as well. So you don't have to go back too far, but just make sure you. Okay, then retract the message. What I'm going to show you as well, guys, quickly, is something that I have been. Let me stop sharing and then share again. Sorry, 1 second. Where is it? Okay, so this is something I want to show you guys as well. Hopefully that works. Sorry, 1 second. Okay, so hopefully you see that. Okay, so this, let me, how far do you look back to plot for the next week ahead? 1, 2 weeks. I generally look at all the time frames, to be honest. I won't look just back to 1 or 2 weeks, so I'll just look at multiple time frames. But what I'm showing you here, as when it starts loading, is a trading plan for basically if you risk 1% per trade, if you stick to your plan, like I've showed you, if you stick to it every single time, this is how much you can actually make. If you stick to 1% per trade, if you start off with £200 right here, you've got a £200 start at the start of January, first week of January, you trade that for 4 weeks, you're already up to, £269 towards the end. And at the start of February, you're up to £292. This is something you got to realize that you can build it up over time. You don't have to, worry about making stuff quickly. As you can see, this is all based off 100 pips per week. And I worked it out. If you risk out 1% per trade, this is how much it adds over time. And what you can actually see is by the end of December, you're up to 17,000 almost. Obviously you'd see the total, which would be, what's that? Your total would be 17,104 by the end of December. Just because you start with that £200 because you stuck to your rules, you stuck to that, and you aimed for 100 pips per week. You can obviously get more; it could be less per in some weeks. But if you stick to it and try and make 100 pips per week, this is what's going to make you money over time. And as you can see, it just builds up over time. It's important to not get too greedy or not too much worried about your account size for now, because you can see with rules, with plans, you can build it up quite easily over time, up to this 17,000 just off the £200 account. If you do keep to your rules, if you stick to these rules with your trading plan, you need to stick to them. Stick to 1%, stick to 0.5%, whatever you feel comfortable with. Just make sure you feel comfortable trading this lot size, and make sure it's not too much or too little sometimes. But as you can see, it takes time. This is something you want to build up over time. Forex isn't a rush. This is based on 100 pips a week. A lot of us can make 100 pips a week. It's some I've been marking out is actually the pips we're making from signals for the group as well. We're trying to help you guys, but also we do provide some signals, and we've been since I've been tracking it since a couple of months ago, since the end of January. And the average is about 100 pips a week. So this is what you could do. Since the end of January, let's just say you start on 200, you'd be up to this point already. You'd be maybe over double the account or something. This is what extra things that can just help you if you are struggling a little bit, or if there's any issues, then you can always use things like this while you're learning as well. Because 100 pips per week, like I said, you can get it, and it is possible, even if it's just an extra boost that you need from other people, from signals or something. It's not the end of the world taking signals. If you don't want to take signals, that's fair enough, but they can always provide you a bit extra pips per week. Like I said, we in the signals we average about 100, 110. So things like this is definitely possible. If you risk 1% per trade, you need to stick to these levels. If you don't stick to your rules, you will lose money in the game, in my opinion. Unless you're very lucky. Better to teach us how. Exactly. We're obviously, we're all about helping you. This is why things that I believe signals could be provided to kind of assist you a little bit, help you out, rather than just obviously give you the pips per week. But if you do need that extra boost, that's where things like that can come in and benefit you guys a little bit extra. But it's all about trying to build it up over time. You're not going to do it in 1 week. You're not going to make £1,000 in 1 week off a £200 account. It's not optimal. It's optimal to risk it over time, keep building the account up. It's all about compounding the account, okay? Compounding is the most important thing, in my opinion, because that's what's going to keep you trading in 5 years compared to someone that's risking 10% per trade that's made £1,000 in 5 days that could blow their account the next day. So sticking to your rules, sticking to your trading plan that I showed you. I can always post this in the chat as well, so you guys can kind of use this as well. maybe it's an example for yourself. I've set it up so what it does, it adds up the amount you make per week as well to the next week, so you can always use that to your own trading plan. So let's just say maybe you make £15 in 1 week, it adds it up and goes along the whole way, so you don't have to do it yourself. So any amount you put in will affect the rest of them, so that can benefit you guys if you want to actually have a look at this and try use this yourself, and it keeps you a bit more disciplined as well, because having discipline is what's going to keep making money as well. But I can also send you guys that example of that trading plan as well, because I do believe that's quite helpful. But like I said, I don't really I don't send the signals myself. I'm trying to help you guys try and learn, try and find entries. That's what I'm here for. But like I said, there's nothing wrong with taking signals. Honestly, you can take it sometimes if you feel that you need that extra boost. I definitely agree with the idea of it. But we in FU Academy are trying to help you guys try learn. That's our main goal, to help, exactly like what Gamers Smoke. Better to teach you how to fish. We're trying to do that for you guys. But yeah, I'll definitely send this trading plan. I'll also send that trading plan example with the strategy that I showed as well, that provides kind of just things to follow per trade. Think about this every time you go through a trade. Like I said, think about it like a step ladder. Go up the steps every time. If there's a reason why you can't carry on going up the stairs or up the ladder, don't take the trade. And it's better, like I said, to not trade at all than to trade and lose your money if you're not confident to trade, if the trade's not going to work out. And that, like I said, is what's going to keep you going in the longer term. Your win rate is going to go up. You're going to feel a lot more confident. You find better entries. You're at the end of the day, I believe in the idea that confluence is confidence. The more confluence you have, the more confidence you're going to have in your trade. And that's the best thing, in my opinion. That's what's going to make you money. That's what's going to keep you going. I wish I had money to buy a program. I really love smart money. Yeah, I mean, at the end of the day, it's it's an investment, and that's what I see things like this as. Investments is what's going to make you money in the long term as well. And going to keep make your money tenfold. And like I said, if you do it 100 pips per week with the assistance of others, or even just by yourself, this is what can happen in a year's time. Don't think about the short term, think about the longer term. What can happen, what you can do as a trader if you make 100 pips per week. If you make more, if you make a little bit less, there's not too much of an issue if you make less or more. But you have to stay within your rules. You have to stay disciplined, and that's what is going to make you money, in my opinion. I'm quite conservative in my trading, so I don't make a crazy amount of risk per month. I don't make a crazy amount per month. I make like 5-6%, which I'm happy with. Obviously, I can make more if I'd like to, but I'm pretty happy with making 5-6% per month. It's works for me. But to some people, you could definitely make more than that. I'm not saying you can't make that. Like I said, if you stick with your trading plan and you have your trading plan that is beneficial to you, that optimizes how you trade, whether it's how you trade, if you trade, scalp, if you day trade, if you swing trade, just make sure all those things are together when you're thinking about getting into a trade, rather than just jumping in. And I've done it myself. Times where I haven't thought about a trade, I've jumped in, got worried, got out. Maybe it's even gone in right direction, or it's just stopped me out, because I haven't had those reasons there that I should have thought about to get into that trade. And that's what you need to get into your head, in my opinion. It's a lot about psychology and a lot about your emotions, and trying to think, have confidence in your trading, and have those reasons why you're getting into a trade, and you'll have a lot more confidence. If there's any questions you guys have, honestly, feel free to ask anything. I'm happy to answer any questions you guys have. So I'm here for you guys. But there's not much for me to go over more. Like I said, I will share this whole trading plan to the chat. I'll share an example of a strategy as well. Maybe some questions you can ask to yourself when you're thinking about a trade, just to make sure you have all these things together to optimize your trading style. But apart from that, I hope you guys have a great week. I think I'm all done for this. Like I said, if you guys have any questions, that's all good. But I don't think there's much else for me to go over, because this is generally what I'm looking at. Like I said, this is what I believe you guys should follow as well. I'll send that to the chat now, actually, as well, so you guys can have a look at it. But so when the price goes to the IC, do you wait for the reaction, or do you wait until it touches half? Yeah, okay. So basically, for the IC, I like to set limits. So I'll generally just, I won't even look sometimes, but I will generally just set at the 50%. Like I said, your stop loss is going to be a lot less, especially if you take it to the wick, the bottom of the wick. And that's going to be a lot more better for you, in my opinion. You're going to have a lot less stop loss. You're not going to have to worry as much. If the trade misses you by a pip or two, it's missed me way too many times already, where it's missed me like by 0.5 pips or something crazy. But that style, like I said, your trading plan has to be this every single time. If I'm not taking off the 50%, I'm not taking it at all. I have to do this every time, and that's what makes me money. This is what's going to make you money in the game. Sticking to your rules. If you want to take every trade off the touch of the IC, you can do, but I stick to the 50%, and that's what works for me. What broker do you recommend as I have trading 212? Okay, there's multiple brokers out there. I wouldn't say trading 212 is an optimal one. I would not use it myself. I have used it. I would say get MT4 and then try something like IC Markets or Vantage. I believe we might have something on something in FU Academy at the moment potentially, where if you sign up to Vantage, you might be able to get some membership. I believe that might be going on still. If not, my bad. But I believe if you speak to Mo about that, he might be able to help you out. Get a Vantage account, which I definitely recommend because trading 212, I used it when I started. It's not the option. Trading View for analysis, very good. My opinion, best thing for analysis. But trading 212 is not good. You don't get any leverage. It's not great. Good to talk about how you decide to go through a trade again. Yeah, I can do that quickly. Let me share a screen. Okay, let me get this up quickly. Okay. Yeah, I believe I'm sharing screen to this. Let me just check quickly. Okay, perfect. Yeah, so I'll just answer this question from Gamersmake. So, how I would decide to take a trade again. Okay, so like I said, what I'm looking for is a higher time frame bias. Okay, so I'm generally trying to trade with a trend. That's what's going to make you the most pips. That's going to get you better entries. It's going to get you a lot better things, in my opinion. So this is what I'm mainly going to be trading off, the higher time frame bias. So if the DXY is selling off the weekly, I'm going to be trying to find sells on DXY or even buys on EU generally on based off that weekly, and then I can look on the smaller time frame on these ICs to see if there's anything that matches. This is what I'm doing. So this does it match the higher time frame bias? Go through these step by step. Does it match? Yes, exactly. Trend is your friend, 100%. Is there a higher time frame IC or level? So when we are looking at a higher time frame, is there a weekly, daily IC, which would be great? This is what we're going to be looking at. If there is, yes, perfect. That's another reason to get into trade. Is there an IC near the start of the move, or is it close to the end? If it's close to the end, we're not really going to be taking it. But if there's a higher time frame IC or level, generally it's going to be a bit closer to the end of the move than the start of the move. So they won't really go together, these two questions. You won't really get no in terms of both these questions. But if it's not the start of the move, we're not going to be taking it at all. It's just not optimal. If it's around the, like I said, maybe it's that fresh level that I spoke about, where it's around the 50% for a continuation, or it's that extreme level at the start of the move. They're both valid. If it's close to the end, it's not valid. And then I'm not going to be trading it at all. I'm not even going to touch it. And like I said, if you don't trade, rather than trading bad opportunities, this is what's going to keep you in the game longer. Has the IC taken liquidity? This is what I'm on about. This is the purpose. This is the IC that has purpose. This is what I'm going to be going through. Even if it's near the start of the move, what has the IC actually done? If it's done nothing, I'm not even going to be taking it because the IC there has to be a reason why this IC is going to work. Are there multiple time frame alignments? Is the 4 hour, does the daily, does the 1 hour match up? Does it all match up together for you to actually get into that trade? This is what we want to be looking at. And if you say yes to all these things, if you say yes, all these things, all green, take it. If there's no's, like I said, if it's a no, but the IC has purpose, then that's okay. You can still get in it as long as the IC has purpose, but just make sure everything is ticked off for you to actually want to get into that trade, for that trade to work for you. Let me answer some more questions. Okay, so Emmanuel said, how do you place limits? What do you consider put into consideration, like placing stop loss and TP? Yeah, so I mean, to be honest, I do most of my analysis on the weekend for the week ahead. So I'll provide an example quickly. So let's just say, I believe there was a. Oh, let me just. Okay, let's just say this IC right here. Okay, it's not amazing IC, but let's just say you want to get in off this. So what are we actually looking at? So this, I'm going to set my entry. I'm going to get my fib out, set my entry on the 50%, and then my stop loss is going to be below the wick. So if I show you guys what I'd be doing, you know, your targets, like I said, great targets, ICs, imbalances, previous highs and lows, great targets, in my opinion. But the stop loss is going to be below there. You know, this is going to give you a lot less stop loss, and it's going to give you, you know, a little bit of leeway if it does go a little bit below. And like I said, if it does just sell off from there, this could give you an opportunity to go for an equal high or go above the previous high. And this is what I'll be looking at per trade, generally when I'm trading off IC. So I'm going to be looking at that every single trade. Look at your targets as well. Look at if there's no great targets as well, there might not be a reason for that trade to happen as well. Like I said, we want things to reason why price is going to move that way. If there's no ICs, if there's no imbalance, it's less likely why price is going to move that way than come back down. Because if we saw a weekly below this level, a weekly IC right here, then this is way less likely to work because this has less purpose than a weekly IC. Do you still make mistakes in trading based on emotions like revenge trading, or that you feel greedy? How do you cope with these emotions? I've had it a couple of times, yeah. Where it's gotten a little bit the best of me. It has happened a couple of times. How do you cope with it? If you're working, obviously it's kind of hard. I'm quite an advocate of meditation. I find it quite helpful. But in terms of on the charts, if you're getting annoyed trading, get off the charts. You know, don't look. Just stop looking for the day. You know, there's always another day in trading. Okay, if you can make it to the next day trading, that's great, and that's what we want in this game. We want to keep trading the next day and the day after that and the day after that, obviously. But if you're having a bad day, then just get off the charts completely. Don't even look. Don't even bother having a look at it. And that's what's going to keep you going, because you're just going to cut emotions completely out of it. You could be annoyed, but that's where you can obviously think about other stuff in life. But just make sure you're not looking at the charts too much, because then that's obviously going to incline you to get into trades and stuff. Just stop looking at the charts for that day if you are feeling that you will be revenge trading, or you feel the setups aren't 100% to your rules. And this is where rules and trading plans work really well, because this is what's going to stop you from revenge trading. Because if you're just trading this and you find these rules, this is what's going to keep you profitable. And regardless if you lose a lot, you're less likely to get annoyed because you've gone through all the steps and it hasn't worked. But it's okay, because at least you know you've gone through every single step you needed to get into that trade in the first place, regardless if it's right or not. And that's where the confidence comes in. If you've got confidence, you're way less likely to revenge trade or feel greedy. Because if you've got confidence to just hold your trades TP, maybe take partials, that's what's going to help you out. When the price misses the IC by 10 pips, can I still use the IC? Yeah, 100%. Yeah, if it doesn't touch, I've got this thing on GA actually. I'll show you. So exact setup. You know, I mean, it could sell, but this was an IC sell I was looking at, and it missed it by 20 pips. Obviously, it's a lot more in GA, the pips, and less value and everything. But it was close to it, and obviously this I would still consider valid if I'm looking at a sell. Obviously, like I said, I'm looking at buyers, and there's a weekly above, so I'm less likely to take it. But this is still valid in my opinion. For me to go through my rules, like I said here, I need to make sure before I get into this trade to look through all my rules, and then get into this trade. But I would consider if something's 10 pips away, even if it's 5 pips away, potentially still valid. Yeah, depending on what the reaction is off. So if the reaction's off like imbalance or something, then I can see the IC definitely still. But if it reacts off another continuation or IC, then I'll just be aware, just make sure that there's no ICs below or above, that price might not even come back to it. Thanks for today. Stumbled on it by chance. That's great to hear. Yeah, great. I hope you stick around for more, because we generally Mo generally tries to do one every Sunday. So feel free to come through to that. Obviously, I don't believe there'll be one tomorrow, but make sure after that every Sunday There'll generally be one about 8 o'clock, so make sure to come along to that. And you might be able to learn a thing or two. Game Smoke said, what percentage of the trades do you base off the IC? Does it not come down to 50% and just hits the open? Honestly, I see more often where it touches the IC than it doesn't. The 50% than it doesn't. There's a couple of times, but I'm not too bothered if it hits the IC because, like I said, I'm following all my rules, so I'm not even worried if it does. But I'd say it's more likely that it hits the 50% than it doesn't. Honestly, like I said, I've had a lot of trades where it's come 0.2, 0.3 pips, and it's missed, and obviously it is a bit annoying, but that's just what happens when you're trading your rules because you're going to stick with it. You're going to find these opportunities, and you will make money trading with your rules. Where can we view the spreadsheet? Yeah, so what I can do for you guys, what I'm going to do is that spreadsheet where I showed you guys a trading plan, the plan with how much you can make, and you can input your own numbers and everything in pips. I'm going to put in the free chat for you guys. If you guys have access to the Telegram, feel free to join if you haven't. I will link it quickly if I can. If you haven't joined already, feel free to join this. This is the free chat. You guys can join. I'll be posting that in there soon. Where can I see your mentoring plans? Yeah, if you go to this website, this is where you can find everything in terms of mentoring. This is, you want to see what we have on offer? Yeah, this is where we've got multiple things. So we've got the monthly, 6 monthly, lifetime. Feel free to have a look at that. Everything we offer, like I said, we have signals, but we're FU Academy. We're trying to teach you guys. We're trying to help you. So everything we have all these courses, where they're trying to help you learn, and we have weekly Zooms, things like this, where we try and help you not just with trade setups, but other things as well, like reasons why you should take certain trades, your own rules, your own setups to keep you disciplined as a trader. What RR do you take and how many pips is your stop loss? Approximately. Well, for me personally, I try 10 to 15 pip stop loss max per trade. Obviously, it depends on the time frame or what I'm taking it off, but I will try to stick to my rule of 15 pip stop loss max. 20 at a stretch, but I'll never go more than 20 ever. And if I'm aiming for at least 3-to-1 RR, so 3-to-1 raw to risk. So obviously, if I'm aiming for 20, I'm aiming for 60 pips. I generally things like take profits. I'm generally taking profits if I'm swinging. I'm generally going to take it around 30 pips. Take profits, just take a little bit off. Secure the trade, get 1-to-1 or 1.5-to-1 RR secured. Then you're fine for the trade. You've got no risk. Maybe set stop loss to break even. If I'm going to be day trading or trading during the week, I'm going to take profit around 20 to 30 pips as well, and that will keep me profitable even if the trade doesn't go my way. I do like to go for 5-to-1 RR, but that's my most preferable. That's the one I feel like I can most achieve. But for me, I never risk enough. I risk like 0.2%, so I'm probably not the best person to talk about the stop loss. But my lot size is generally a bit smaller. So but I do try to do 10 to 15 pip stop loss max. Like the example here, try stick to a number if you can. Obviously, if you're trading GA versus GU, you might a little bit more stop loss for GA than you do for GU. So just bear that in mind. But try stick to a certain amount if you can. Noradine. Yeah, so this stream I believe will stay on YouTube, so you'll be able to look at it. So you can watch after, have a look through what I spoke about GA. It was the first one I spoke about as well. I do have seen a lot of opportunities in it. I do believe that it does have some opportunities in the next couple of weeks, so definitely watch through back on that. Definitely be on this all the time it's on. Thanks, Mama Man. You could do a couple of things for me. Yeah, great to hear, buddy. Like I said, Mo does this every week for you guys, and we do Zooms a couple of times a week in the group as well. We go a bit more into advanced. This is kind of the thing you will be kind of getting. This is kind of things I show to the guys in the group as well. This is the type of things I'm trying to show to them. And like I said, not just entries and exits, or not just the fact that we do signals, but trying to help you guys to become better as traders overall, with trading plans, with discipline, with psychology, with emotions. This is what I'm trying to help you with. The full package of being a trader, not just trying to find trades. Because anyone can find trades. You know, you can find trades quite easily, but there's everything else that comes with trading, the emotions, everything like that. That's what I find the most important, in my opinion. Yeah, so feel free, guys, if you want to have a look, check out the free chat. You know, sometimes we post some signals in there as well. Some trade ideas that we have, which, you know, sometimes you can have a look at, sometimes take a trade. We posted a trade idea in the chat on this week, and it actually made 50 pips or 55 pips, I believe. So obviously that's always a great thing. I do believe there might be a discount code if you're lucky at the moment. It might still be going on. Mo will have to let me know on that in the free chat going on. So if you guys do want to sign up and get stuff like this every single week, you know, even 2-3 days a week, I believe up to 5 days a week, even the amount of times we do Zooms in the chat. But yeah, feel free to check that out. I'll just answer this one last question, and I think that'll be it. I've got two more actually. When an IC has been broken, will the price react when it comes back to it again? Okay, well, it depends. Okay, it depends on when the IC has been formed. So if it's something like this, it's been broken, yeah, I'm not even going to bother it with it again. I'm not going to touch it. So basically, what I'm going to be doing next week, I'm just going to be deleting this IC. It's not going to be valid. There's no real reason for me to look at it again because it's been broken. It's been broken on the downtrend where price I see pushing up, but I don't see this for any some sort of reaction. Could you say once more what areas in the market you love to be? Okay, so yeah, so sorry. So I look for ICs that could suggest reversal. I look for imbalances. I look for equal highs and equal lows. So obviously, you know, up here, if I'm looking for a buy, I'm going to be taking profits around here. So let's just say you get in here, I'm going to be taking profits here, the equal high and the equal low. Or you know, something on a higher time frame, like an IC or a certain level I've been looking at. That's generally when I'm looking for my take profits. Because obviously I trade with more than 0.01, so I'm generally taking profits along the way. If you do trade with 0.01, just make sure you get to a level that you're happy with. So I generally look at stuff like ICs and equal highs or lows for your take profit full if you are trading with a little bit less in your account. But I hope that helps, guys. If you guys have any questions, obviously feel free to type into the chat, in the free chat. We might be able to help you out. And like I said, feel free to check out the website we have. And you can always join the premium group, and we're definitely able to help you. Sorry, once more. Okay. Let me type it in chat for you. Highs, lows, equal lows. Oh, sorry. What time frame do I enter on? It depends. You know, I enter on multiple things. Like I said, I try to base my trading off my higher time frame bias. So where I think price is moving to on the higher time frame. So it could be based off a weekly, but then I'll look within the smaller time frame. So the highest I generally, if I'm trading off a time frame, the highest I'm going to trade off is a daily if it's a small enough IC. But generally, I'll be looking at the 8 hour, 4 hour, 1 hour, 2. So generally, these are my optimal things for trading. These are generally the ICs that is going to cause more of a reaction than these time frames. These time frames are always going to find you. If you can find, let's just say there's this. So what we've got right here is you've got a 30-minute within a 4 hour, level right here. So what does this suggest to us? This suggests to us that this gives you a better opportunity. It gives you, you know, it suggests that multiple time frames suggest that it's more likely to work as well. So this is where you can find an entry that gives you a little bit better than just a 4 hour. Because if you take the 4 hour, you're looking at 20 pips, which is fair enough. But if you trade off the 30-minute within the 4 hour and you've still got that higher time frame bias, you're looking at, you know, 11 pip stop loss. You're looking at half the stop loss because you looked at the smaller time frame. So generally, I won't trade the 30-minute too much. I don't really look for them, but if I can find them within a 4 hour IC, like you've got this 15-minute as well, it has to be within another IC or just above, like we saw on DXY, where that 30-minute was just above or in the wick of a 2 hour. I feel the higher time frame. Yeah, exactly. On the higher time frame, the SL is quite large. So I will look on the smaller time frame within an IC on a higher time frame to see if I can find something like this, where instead of, like I said, instead of a 20, 30 pip stop loss, you're looking at 11. And that's a lot more optimal. That's within my 10 to 15 stop loss. And that's a pair like GA that generally moves a lot more. So even 10 to 15 pips is a lot less value than on a pair like GU. I hope that helps. Like I said, if you guys have any questions, feel free to put some in the free signals chat. I hope you guys have learned something as well. And I hope you guys have a great evening. I think I've got one more question as well. I'll answer this one and that'll be it, okay? If there's an IC, how do you choose to use a BOS for an entry or wick off? Okay, so what I'll generally be looking for is obviously if there's an IC, I'll be trying to find, let's just say something like that, where it suggests to me, let's just say obviously this isn't an IC, but if there's this break here or something similar, then I'll be looking for a price to obviously make a lower high because it's made this lower low, so I'll be expecting price to potentially react off this level. And this is where I'm going to be trying. I want that break structure to the downside or to the upside, obviously in the opposite direction, and then I'm going to be wanting to trade off an IC as well potentially. But yeah, so a 30-minute inside an IC on the 4 hour, exactly, and it's within this level as well. So multiple things add up, and this is what I'm on about with the trading plan as well. Are there multiple time frame alignments? You've got what have you got? A 4 hour level, you've got a 4 hour IC, you've got a 30-minute IC. Perfect. These are things that add up together to help you when you're trying to get into a trade. These are the things you want to be looking at. These are the rules you need to stick to. Stuff like that is definitely stuff I stick to when I'm taking my trades. But yeah, hopefully you guys learned something. Hopefully I answered some of your questions. Make sure you subscribe as well. Like I said, feel free to check out our website or even the free chat. And might see more of this next week if you're lucky. So have a great week. Hope you guys catch some pips and make sure to tune in next week. Thank you very much.